Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Joe Tigay, Managing Partner at Equity Armor Investments, for an update on Nasdaq-100 performance, volatility trends, and we'll also talk about how investors can use EAVOL in their portfolios. Joe, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me.
You got it, Joe. Kind of a busy week for the Nasdaq-100 as we had a mixed bag with some of the heavyweights reporting this week.
Yeah, it's always a busy time of the quarter when we get these numbers starting to roll in, and it's really fun to see them as a trader, and also interesting to see the market reaction. Of course, we've been anticipating big numbers out of the big names like Google and Apple. They had really good numbers, and Apple, of course, having a little bit lower result after their earnings. Google having a fantastic result after their earnings. Just fascinating to see. Now, leading up into this, the expectations have been sky high. Seemingly, the earnings are meeting them, and it's just all about the guidance going forward. Apple downplaying their future guidance. Google just blowout quarter, just any way you can look at it. But just for long picture, Apple always does seem to meet their expectations. So sometimes they can lower the expectations so that in the future they can beat them.
So, Joe, really, what is the market focused on? We know earnings have come in sort of a mixed bag, as we were just mentioning. Is it the Fed? Is it yields? Is that really what is underneath the surface here?
That's been the name of the game, and it continues to be. Now, it's really interesting. The big cap tech is just getting the best of both worlds. The big cap tech is taking advantage of a hot economy, and it's also taking advantage of the lower medium to long-term rates. It's really just a win-win situation for them. They can refinance their debt cheaper, and of course, it's a hot economy, so they're doing well in that way. And it just continues to be the case that the big cap tech is going to expand on their advantage. They have the smartest engineers in the world. They have the smartest people in the world building their products, and they know what's coming down the pipeline next. They're ahead of the game, so they're always looking to expand in all different areas. And it's really just amazing to see how the big keep on continuing to get bigger.
Joe, are you concerned at all that there's a handful of stocks that are really driving the index this year?
This year is no exception. It just keeps on going and going. I think that's a possible bout for volatility when we have fewer stocks at a higher percentage of the index. That can cause, one drop, a drop in Apple, drop in Microsoft can cause a bigger drop in the index. Of course, people should be aware of that potential possibility. However, it just is the survival of the fittest, and over time, that's why the indexes have always historically gone higher.
Let's talk about volatility trends and remind us again what EAVOL is, how investors are using it in their portfolios, and how it's performed through the latest earnings cycle.
Yeah, EAVOL is a continuous VIX future trading strategy for volatility. It allows a buy and hold method without the consistent decay associated with other products. We can put that in a portfolio with a risky asset such as the Nasdaq-100, such as in the EAVOL Nasdaq-100 Volatility Hedge Fund, which allows us a continual volatility hedge to the Nasdaq, and allows for a continual back and forth trade. Because times like now, they seem really good. We're talking about how good things are for the big cap tech. The economy is strong, rates are low. But when times are really good, when you have the time of plenty, is the time when you really need to think about protecting the downside, because when the downside happens, there's nothing left to protect with. So that's why this trade is so good. It's a trade where we can maintain this protection while things are going good, to have it there for when things turn around. And of course, gives us the opportunity when stocks do correct to buy back lower.
That's a great point that you make. Thanks so much, Joe, as always, for the insight, and thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.